Good day, ladies and gentlemen. It's Eric Coffin, HR Advisories. I'm here at the September 2024 Metal Investors Forum in Vancouver. I'm here with Mark Kolebaba. He's the CEO of Adamera Minerals. Adamera has been a very long-term holding for me. Stock hasn't really loved me back up to now, but c'est la guerre in the exploration biz. Having consolidated the stock for people that are new to it, the stock is now very tight, market cap's low. They're about to embark on a drill campaign on a couple of projects. They're ones that I liked. I mean, one of the two Adamera just picked up like literally a couple of days ago. And full disclosure, I may have prodded them a little bit on this one because I've always liked the existing project, Flag Hill, and I again, full disclosure, I like it enough that I'm writing a check in the placement that he's closing so that they can drill this thing. And I love how the logistics are just fantastic for this. And this is going to be so cheap to drill compared to what people are used to seeing in, Nevada or, God forbid, Chile or Argentina when it comes to drill costs. Your drill costs are just going to be ridiculously low.
Now, even if you compare it to buckhorn, for example, buckhorn, the drillers need to drive 3 hours a day. That's at overtime. Your water is coming from a long distance away, 3 hours round trip for water. So those things add up. When you're in Flag Hill, you're talking about, a 4-minute commute?
Yeah.
You got water right there. It's and not only that, but your weather. You're not going to weather out in October or November. You can work all season long. Right. You'll shut down for Christmas, but that's it. You're at 800 meters elevation.
Right. And I think you're the first phase anyway, you're probably going to use the company rig. So you're talking, probably tens of dollars per meter rather than hundreds of dollars per meter.
Absolutely right. We'll drill one shift, day shift, just at least to start, because we don't want to
upset the neighbors.
Yeah, but I think that's not really a big deal. These rigs aren't that loud anyways, but it's a good way for us to start, dip the toe in.
Yeah.
And we've got those two projects. We've got Flag Hill South and we've got Flag Hill. Flag Hill is not far away. It's less than a kilometer away, but it's also, it's low elevation. It has the same benefits in that sense. So the one difference is it's on BLM ground and we'll have to permit that.
Right.
So we'll go ahead and start permitting on that and get ourselves into maybe a March drill program there. So we're scheduling 2 drill programs, Flag Hill South, and then get to Flag Hill. And then from there, either Buckhorn or Empire Creek.
Right.
Unless, of course, we hit something that's so intriguing that we can't even leave.
You just keep going. Yeah.
Flag Hill South.
Yeah, and Flag Hill South, that's one important thing to recognize is this is mineral tenure on private land. Yeah. And the big deal, the really big deal with working on private land is there's no drill permitting. So, I mean, you're planning to be out there in a couple of weeks, as opposed to God knows how long if you're drill permitting.
So we closed the deal a week ago, and we can be on it drilling tomorrow if we want. We'll probably do a little bit of work just to make sure that we're really drilling the right spot. But first week of October, we can have the drill turning on that.
Now,
can you benefit?
Both of these they're both essentially the same. Maybe a bit of background on the camp, I guess, that they're in, and what is the mineralization style.
Okay, so we call it the Republic Gold District. It's produced more than 4 million ounces, high grade, 24 grams per ton. It was mined by Hecla. Not only is it gold, but they also produced 15 million ounces of silver at 110 grams per ton.
Right.
So great grades, decent sized deposit. Hecla mined that for 100 years, and they really focused on one area. And this private land, you've got veins on it that are 10 feet wide, running up to 9 grams, but they haven't been drilled. And, I think people back in those days, were looking for only bonanza grades, but maybe didn't understand the deposit as well as we do today or in the last couple of decades, that you need to drill down. So if you're higher up in the system, you need to go and test it at depth to see if you get a widening and an increase in grades to bonanza grades.
And these are sort of low sulfidation epithermal veins.
Yeah.
These are fairly well understood deposits because they've been worked like crazy, especially in the Basin Range in Nevada, Arizona. What's the reason for management's belief? And I know you're not the only ones. There's other there's others that have looked at it and came to the same conclusion that you're high in the system, because that is a pretty important point.
Yeah, both projects, Flag Hill and Flag Hill South, they have a lot of the textures that you want to see, the banded silica. That's one thing. But the chemistry itself is, especially at Flag Hill, you get a much higher amount of arsenic, less antimony. At Flag Hill South, less arsenic, a little bit more antimony. But in both cases, you're not seeing that base metal concentration that you see at depth. The chemistry is very clean and it looks very high level.
Okay, so you've got, and I think at Flag Hill, I think there's a grand total of 1 drill hole between the two projects. And that one drill hole, that old drill hole at Flag Hill, also goes a long way to sort of proving the idea that the boiling zones, at depth, it's not that deep, but
Right.
below current surface.
So you've got a mine there that was mined at 7 grams per ton gold, 21 grams per ton silver. And, like I said today in that presentation, that was probably not considered exciting because back then, $20 gold, and at Nob Hill was multi-ounce grades.
Right.
And so that was probably not that exciting. So you're pretty high up in the system. You got some very banded silica. You got a lot more arsenic. When you look at this drill hole that went in 1957, it was the last drill hole. That hole intersected at about 110 meters, 41 grams per ton, 277 grams per ton silver. So a major change in the grade. It's only over a meter, but still that's okay because veins pinch and swell in both the vertical sense and the lateral sense.
Right.
So we'd like to put a number of holes into that and see where that's going.
41 grams and 250 grams. You take that to mining with still pretty high grade
That's
stuff.
right. That's exactly right.
This is, and I really like the simplicity of this. This is part of the reason why I prodded a bit. I'm really glad that Mark's picked up the second project and that he's going to start drilling here. It's nice, simple drill spec. You've got the veins. The veins got gold in them. You're looking for a boiling zone. All indications are you're above it, which means basically you drill to find the boiling zone. Extremely cheap drilling, fantastic logistics, year-round drilling, no permitting on the south property. It doesn't get any simpler than this when it comes to a drill spec. I love this as a drill spec, and your market cap right now is about $3 million. So, you can definitely move the needle with some good drill holes here.
Yeah, and when you compare that to Buckhorn, which is a project I love.
Yeah.
But it's still it's $1 million or $1.2 million drill program because we've gone out there and drilled 1 or 2 targets and we've had some success, but not. We need to drill 15 or 20 targets to really make it, to remove some of that risk.
Yeah.
And when you go to something like Flag Hill, you're drilling a vein that has got 7 grams or 9 grams or 12 grams, and you're going to test it at a few different depths, but you've got a number of veins, and it just is more of a risk profile for a company that, we're going to have $500,000 in our treasury.
Yeah.
That's very, very suited for that type of project.
Yeah. Yeah, you can drill with your own rig, you can drill a lot of holes with that placement.
And let's face it, I think we're going into a gold market. And if you do have some success, it should attract interest in that. So going out and raising a lot of money right now is probably it's difficult, but 2, it's quite dilutive. And I'd rather be raising it at higher prices for these bigger projects.
Right.
That's the way these juniors are built, and it makes sense for us and the shareholders.
Yeah, it's a great story. Adamera Minerals, ADZ on the venture. They'll be financed, ready to go. With their drill setup, they can drill a lot of holes with, $200,000 or $300,000 gets you a lot of holes when you're drilling with your own rig, and the logistics are that good. Very simple story. If they can find the bonanza zone, this is an area where the mined grade averaged an ounce. So, there's potential for really high grades.
At Nob Hill, the cutoff grade was 7 grams.
Right.
That was their cutoff.
Yeah.
So it's unbelievable, really.
Yeah, great story. I think this is one you want to be paying attention to when they start drilling in a couple of weeks. Thanks for coming by, Mark, and walking us through it.
Thanks, Eric.
Yep.
Appreciate it.